Chapter 3 Profitability Part 3. Last time we talked about the basic profit factor, details about those, and yours alone. We briefly talk about the performance measure, and we'll talk more about these performance measures and human resource productivity this time. So let's briefly review the last slide of the last class. So I mentioned that it's really important for retailer to measure the productivity or efficiency of sales, personnel, space, and inventory, because you can make a proper plan to have more like productivity based on the employees and based on the space and also based on the inventory. And two of the examples that I gave you was the human resource productivity, and the other one was space productivity. And today we will talk more about this human resource productivity. So let's go ahead and start about the human resource productivity. And the productivity of human resource can be measured in many different ways, and also that's really important because you can kind of schedule the right amount of the hour for your sales associate, and you can kind of measure how much performance they made and so on. So it's really important to know about this human resource productivity. So first, you can calculate the productivity based on the selling cost and also sales per transaction and sales per employee hour and also sales per full-time employee equivalent. And I'll show you each one and you can learn how to calculate each details. So let's go ahead and start from the selling cost. And I really want you to think about the case and just imagine that you're working for the company, so you can kind of calculate it based on your imagination that you are really working for the company, because I said that it's always really easy for you to apply that for the real situation. So just think about that. So let's start from the selling cost. Gross wages can be calculated based on the number of hours worked and hourly pay rate. So if you work for the company, that's gonna be your wages, right? So how many hours you work multiplied with the hourly pay rate, of course, right? And selling cost percentage can be gross wages divided by the net sale. So that's what I talk about, this productivity based on the selling cost, right? So you can kind of say the percentage of your, selling cost, right? So selling cost percent is the relationship between the sales productivity, net sales, and the person's wages. So it can be calculated for an individual salesperson or a department and the store or other retail format as a whole. So it can be just by one personnel, how much selling cost productivity they have, or it can be by the department, or it can be by the different format as a whole. So here is an example. So this example 3.15 asks you to calculate the selling cost percent. So calculate the selling cost percent for a person who worked 38 hours at a wage of $8.10 an hour and had net sales of $2,849. So what you have to do first, if you remember, you have to calculate your gross wages, which is gonna be hours that the person work multiplied with the hourly wage, which is 8.1. So now you got the number of $307.80 as the gross wages of that person, salesperson. So this is easy, right? And now you have to calculate selling cost percentage. So now you know both gross wages in dollar and net sales in dollar, so you can calculate the selling cost percentage. So that's gonna be, where is the wages? There you go, 307.8. That's gonna go to the top, and you're gonna divide it by where is the net sale. There you go, here is that, 2,849. Then you can calculate the selling cost percentage. So then you got 0.10803. Then you can multiply with the 100 because I asked you to calculate the percentage. So that's gonna be 10.8%. So that's gonna be the productivity of that person, the selling cost. So based on the wages and net sales, you can say that the selling cost percent is 10.8%. So out of these net sales, the person's selling cost percent is gonna be 10.8. Alright, then now let's talk more about the other part of this like selling cost, because if you know, also some of the company, they can pay more of the commissions. So now you can also calculate this commission dollar if you know the net sales and commission percent. So commission is the percentage of the net sale paid to the seller of the merchandise, and retailers such as Nordstrom, Neiman Marcus, they pay commission addition to some like a basic wages to encourage excellent customer service. So because they kind of encourage you, because you're getting more if you're selling more, so you can get more commission. So they try to encourage the salespeople and make them to do more excellent customer service. So let's look at this example. Calculate the commission a salesperson would earn on a net sales of $1,200 if the commission were 10% of the net sale. So how can you calculate the dollar commission in dollar? Now you know the percentage of it, so you can simply multiply these two. So 1,200 multiplied with the 10%, so your commission dollar that you will get is gonna be $120. So that's gonna be the dollar amount of the commission that the person will get. And also you can calculate the average commission earning per hour based on the total commission and total number of hours worked. Because sales people may calculate their average commission earnings per hour by dividing their total commission by the number of hours they work, so that they can know the average commission earning. So example, calculate the average earnings per hour for a salesperson who worked 25 hours and earned a total commission of 275. So you know the hours the person worked and the total commission. So that will be your total commission dollar. So now you know it's 275 and divided by the number of hours worked. So that's gonna be 25. So that means 275 divided by 25, that is 11. That $11 means that you have average commission earning of $11 per hour. Okay, so you can kind of get your additional like this commission per hour. Okay, and let's look at this gross margin and the earning and average earnings per hour based on the concept of this selling cost. Your gross earning can be calculated, because if you have this commission as well, not just you're paid by the work hours that you work, but if you also have commission, you can calculate this gross earnings. If you don't have the commission, you can simply not including this, right? But now if that's the case, you have your hourly paid and also commission, you can calculate this gross earning. So your gross earning can be calculated like this: number of hours worked multiplied with the hourly rate plus commission. And also your average earning per hour can be calculated by the gross earnings divided by the number of hours worked. So this is another additional concept you can kind of apply and learn about it. So some retailers use a combination of these hourly wages and commission for all or some of their employees. So maybe you already had some kind of, this kind of experience, or you will, right? So now you kind of know how that works in the retail field. So the combination guarantees the employees the minimum level of the wages, and plus you also get some kind of commission addition to it. So it really encourages you to work like harder, and also good, the customer service, as I mentioned before. So it's gonna kind of like work well in some condition, or some of the retail store, they really just pay by hourly, so it really depends. but I want you to know about all different cases here. But based on the previous slide, let's look at this example 3.18. So this is a case you're paid by the hourly, and also you can get the commission. So imagine that you're working for a company and your hourly wage is $10 and you have a 6% commission on sale. And it says that last week she worked 38 hours and had net sales of $4,821. Calculate the selling cost percent and average earning per hour. So let's go ahead and start. And I give you this formula so you can kind of look at it. So also more important thing is that instead of you're memorizing thing, I really want you to understand how that work, how it's calculated like that. So I'm giving you this formula here so you can kind of go follow this formula. So let's look at the first one, gross earning. So gross earning, as you can see from the first formula here, you can calculate it number of hours worked, which is how many hours? 38 hours, right? And how much the person paid? $10, the dollar per hour. Okay, so this is gonna be that wages, that hourly, that whole wages based on that hourly wage. And you can also have this commission. You can calculate it. It's gonna be total net sales, right? Multiply with your commission percent, which is 6%. So what you can get is 380 plus 289.26. So you got 669.26. So this is gonna be your gross earning. So we didn't get to that A and B yet, but let's go ahead and do that. So now you can calculate the selling cost because you know this gross earning. So your selling cost percent in this case is gonna be, because you also have to include this commission because you're paid with the commission as well. So your gross earning divided by your net sales is gonna be selling cost percent. So you got this 13.88% as your selling cost percent. And the second one, you can also calculate your average earning per hour, which is gonna be gross earning divided by total number of hours worked. So where is the gross earning? Yes, here 669.26. And how many hours you worked? There will be 38 hours, right? So that's gonna be 669.26 divided by 38. So your average earning per hour is gonna be $17.61. So you can say that your average earning per hour is $17.61. So this includes both your hourly wages plus commission. And now let's talk about different concepts. So units per transaction. So you can calculate this productivity depending on the transaction too. So not just by this employee or their hourly work and so on, but now we are talking about this unit per transaction. So average unit per transaction can be calculated by the gross units and divided by the number of transactions. This unit per transaction, also called as UPT, measure the average number of items that customers are purchasing in a transaction. So you can kind of tell you that how many items you sell, right? Based on that transaction, right? So how many units you sell in each transaction. So the higher the UPT, the units per transaction, the more items customers are purchasing during each visit. So that means that if you're selling 10 units and have one transaction, that means that your average unit per transaction is 10. So if you have more number, that means that that the transaction, you have more selling. You have more selling of the items, right? So to determine the average units per transaction, you divide the gross units purchased by the number of transactions for the period. And I really think the example will help you to understand better. So let's look at this. So example 3.19. So a salesperson sold 120 units and had 40 transactions. And can you determine the average unit per transaction? So it means that the salesperson rang like 40 times, and all the unit that she or he sold or you sold during that time 40 times, the person sold like 120 units. But now you want to calculate the average unit per transaction. So there will be total units, right? Gross units divided by number of transactions. So that is 120 divided by 40, and what you will get is 3. So that means that each transaction, average unit per transaction is gonna be 3. So at least you sell like a 3 at a time, so that's gonna be the average unit per transaction. But you see this, if you have a higher number of this average unit per transaction, that means that you sold more items from each transaction, right? So you can understand that way. And let's look at the next one. And now we are talking about not the unit, but average sales per transaction. Because even though we talked about this average unit per transaction, that doesn't mean that maybe you sold much, right? Because maybe this person purchased many items, but the price will be low, and so on. But maybe one-time purchase from the furniture place, maybe they spend more, right? So you also want to calculate this average sales, not just the average unit per transaction. So you can calculate this average sales per transaction by gross sale and number of transactions. So what you can do if you want to calculate the average sales per transaction, there will be gross sales divided by number of transactions. So this can tell you that your salesperson's productivity, and they will show you the ability to capture the customer's interest. So it can kind of tell you that how much, what kind of product they like, and you can kind of see that price wise, how they really, purchase the product. So also it's gonna be helpful if you look at the example. So let's look at the example number 3.20. So this is telling you that if gross sales totaled $25,400 on 112 transactions, can you determine the average sales per transaction? So it's easy and simple again, right? So what you can do, it will be total gross sale divided by the transaction, right? Total number of the transaction. So that is, here's the gross sales, that is 25,400 and divided by 112. And you can kind of go ahead and practice it. And how much you got? That is $226.79. So your average sales per transaction turned out to be $226.79. Okay, so you try that, right? Okay, always have the calculator and always try to do it together. Now we're gonna talk about sales per employee hour. Also, you can determine this, sales per employee hour if you know the net sales and how many hours your employees work. Also, that will be important to see, how much sales that employee made depending on the hour, work. So you can do this based on the net sales and number of employee work hours. So it relates the sales for a period to the number of hours employee work. So you have to know how many hours your employees work. And also you have to know the net sales to calculate this sales per employee hour. And this, concept often used in retailing as a performance review component. Because if you have more of this sales per employee hour, that means that they have more productivity, right? So of course it's better to have more if you want to see more of the performance. So let's look at the example 3.21. It says, during the past week, sales at one store totaled $359,000, and during the same week, employees worked 3,890 hours. So it's a big company, right? There are like, some, few employees. You don't really have to know how many at this point, but then total worked hours all the employees had was 3,890 hours. So what were the sales per employee hour for the week? So now you know, based on the previous, slides formula, you can calculate it. One divided by the other one. So what's gonna be that? So net sales divided by number of employee work hours. So that is 359,000 divided by 3,890. Then you can get 92.29. So $92.29. So that means that the sales per employee hour is 92.29. Okay. So that one employee and per hour, like they make this much sale, each hour, right? So if you have a bigger number, if you have like a 200 something, that means that their productivity is more, is higher. Okay. And now another concept, sales per full-time employee equivalent. Because sometimes you have a part-time employees, right? But then you want to calculate it based on this, full-time equivalent. Then you can also calculate the sales per full-time equivalent. If you know this net sales, of course you have to know this total sales, and you can divide it by number of full-time equivalent employees. So you have to calculate how many number of full-time equivalent employees you have. Maybe you have 5 full-time employees, but you have like 10 part-time, employees, but these 10 part-time employees maybe equal to 3 full-time, something like that. Then you can kind of think that, you can kind of transfer that into full-time equivalent. So this measures sales productivity based on full-time employees. So if you have full-time employee, how much they make. So full-time employee is the worker who is employed year-round and who works generally 35 to 40 hours per week. So if you work like a 20 or less, often that is called as a part-time employee. And it really depends, and there are like a different benefit and so on. So maybe some company will hire a certain number of full-time employees and some part-time employees. But it's gonna be important to check this, sales per full-time equivalent to figure out the productivity based on this full-time, equivalent. So let's look at the next slide, right? Sales for full-time employee equivalent. And this is the relationship of the sales for a period of time and the number of full-time equivalent employees who work during the period. And part-time employees must be converted to full-time equivalent by totaling the number of hours worked by part-time employees and dividing by the number of hours considered to be a full-time week. So if I just describe it, maybe it's really hard to just get the idea, but always the example will help you to better understand. But as I mentioned, maybe you are 10 part-time employees equivalent to maybe 3 or 4 full-time employees, then you can kind of convert that to the full-time equivalent, right? To calculate the sales per full-time employee equivalent. So let's look at the example now, right? So a department had weekly sales of $35,600, and you have 2 full-time employees worked 35 hours a week. So that means that you have 2 full-time employees. And you also have 8 part-timers worked a total of 210 hours. So if the store considers 35 hours to be full-time, determine the sales per full-time equivalent. So what you have to do, you have to calculate the number of full-time equivalent first. So 2 plus these 8 part-timer can be converted into full-time equivalent based on this hour. So what you can do like 210 and divide it by this full-time 35, so you can kind of calculate that number. So let's look at this. Your number of the full-time equivalent is gonna be these total hours that these part-time workers work divided by full-time they consider. It's gonna be 35. So that is, you will get 6 out of this, and you have this 2 because you also hire. You have 2 full-time employees already, so you're gonna add these 2 together. So this 6, your 8 part-timers equivalent to the 6 full-time workers, right? So this is can be converted to 6, and plus you have 2 full-time employees, so you have total of 8 full-time equivalent. Even though you have how many workers you have. I mean, don't think about the part-time, full-time. You have how many? 10. 8 plus 2. But if you want to convert that to the full-time equivalent, your 8 part-timer are equivalent to 6 full-time worker. So that's good. So now you can calculate your sales per full-time equivalent. So that can be your total of the net sales divided by your full-time equivalent number. So where is your sales? Your weekly sales here is 35,600. So you will put that at the top, and you're gonna put where is the number of full-time equivalent. There you go. You calculate here. So you're gonna put this at the bottom. So you will get 35,600 divided by 8. Then you will get this 4,450. So this is that you can tell that the full-time person kind of make the sale of 4,450 that week. So did you get the meaning of that, and did you understand what that is? So you kind of see how you can calculate all this productivity based on these human resources. Especially for this part, you learn how you can calculate it, or all these like productivity depending on the selling cost and also the transaction. I mean the sales per transaction, and also the based on the employee hours, and also for this full-time equivalent. So you kind of learn a lot. So what I suggest you always, you can predict more with the additional problems that you have in the book, and you can always go back and try this problem that you did with me together. You can try that again, but always think about the situation, and you can apply that. Kind of think about the situation that that you're in the situation. And we're going to talk more about the space productivity and inventory productivity the next time for the chapter 3 and part 4. So that's it for this video, this lecture, and I'll see you the next time.